Oh yes, legends, oh yes. We are here, let's analyze the situation for the price of Bitcoin altogether. How's everybody doing? Hope you're doing absolutely wonderful today. Let's discuss the price of Bitcoin. How is everyone, guys? Much love to everybody. Let's go through the comment section. We got a good one today, guys, because we are at a crucial point. You know, are the bulls going to decide that they break out from here, or do we form a lower high? We're kind of teasing this zone, trying to get back inside the value area of this entire trading zone of the last 5 weeks. We're testing it, rejecting, trying to break above it. It is the rejection point for the bears, I have to say. It is the rejection point for the bears, because if they do not reject from here, well, you know, I wouldn't be too confident and too comfortable in trying to short if we pump out from the recent highs that we formed yesterday. By the way, whoever shorted from this zone, very nice. We did get a little bounce at the point of control. This is on Coinbase, of course. Some exchanges might have the point of control slightly lower. There are a few volume spikes here, but overall, it's a tricky area. However, the bears need to reject the price from this zone. Okay, we're gonna break it down. We're really gonna focus on this price action today, mainly because the higher time frame, I think we know very much the higher time frame, how it looks like. But we are going to focus on this range. But I have to say, bears need to reject from this point on the lower time frame, because if we take out this recent high, it is true that we do have some resistance levels, okay, at this zone at 72.5. There's a daily, there's a naked point of control, which can be, you know, interesting for a scalp entry short, okay. We're going to discuss a few things. There's also an amazing fractal that Devil discussed. Shout out to Devil, by the way, in the morning live stream, okay, which is very interesting. That's from the price action that we had in 2022. Very similar way of moving with the price action from this zone that we had throughout May of 2022. We can discuss that as well on the stream today. First of all, let's say hello to the beautiful community. Much love to everybody. Smash up the like button if you do enjoy the content. Let's say hello and give me your opinion. I'm in a short, I'm in a long, I'm long from here, I'm short from there. Do we go to higher prices? Give me your opinion. I'm happy to read everybody here in the comment section. First of all, let's, you know, get this disclaimer out of the way, of course, because the content is for educational purposes only and is not financial advice. The information provided is not guaranteed to be accurate or complete. Always conduct your own research before making any financial decision. Said that, let's go through the comment section. Say hello to the absolute beautiful community. Paz Maria Vallejos, Andy, much love. Much love to you. Desde Barcelona, vámonos. Afternoon TA, nothing beats it. I'm sorry, I'm a little bit late today. I had to sort out a few things, but we're here, right? We're here. We can get some stuff ready. He is back. Thanks for coming live. Much appreciated. Best TA on YouTube by far. Wow, thank you so much for that awesome comment. This is absolutely insane. Thank you. Mumtaz, Andy at 19 my local time. Thanks for making time for us, Andy. Guys, please like, much love and respect. Thank you very much for the kind comment. Yeah, I know you, Devil, morning, early update. Okay, it depends on where you are in the world, and then I'll try and do as late as possible. Of course, New York time, maybe an hour or two after New York time. Okay. Legend, smash up the like button. A Trader, much love. What's up? Distance Music, let's go. Thanks for joining the stream today. Also, oh yes, Carl Cox, let's go. Mumtaz, much love to everybody. I'm going to take a while to go through everybody. Axikuno, hello Andy, how are you? Late live stream today. Yes, today a little bit later than usual. Mariella, BTC, let's go. She's here. The absolute legend moderator. Thanks for joining, Mariella. Meme Cat is here. Oil buy or sell. We can take a look at oil. I think oil did get a little bounce. Okay. Who is Joan? Joan's a legend. If it's the Joan who's in the trading community, he's a legend. He's looking at all sorts of Elliott wave scenarios on the lower time frame. He's an absolute legend inside of the community. Very active indeed. What's up, Andy the best? Thank you very much, my man. He is right. You're the best in this YouTube. Thank you very much. All right, let's go. B-Boy Alvaro. Boy Alvaro, sorry. 1510 for me. Okay, great analysis, always much to learn. Lumina, thank you very much. You can call me Jerome. Okay, let's go through. I'll go through comment section later on. Where we at right now with Bitcoin? Man, it just, for me, it feels like, I'm in favor of the bearish case, but when we're tackling this value area high and it's dancing around, is it to confuse the people that have a little bit of more bearish sentiment, such as myself? I'm in a very, very good short position from this zone. Yesterday on the live stream, we didn't get a local double top. We ended up correcting about $2,000. No, not even that. Yeah, around about $2,000 from that peak. We knew it's a big resistance area, fake out of value area high. We got some lower highs in this region. You're coming into the golden pocket from the high to the low, attempting to break above it. And now we're back up here again. We need to focus on the local time frame, because for the bears, I would prefer a lower high from this pivot, so that they really struggling here and roll over to, preferably to start breaking down. And for the bulls, very, very hard to get into a long position here. Of course, there is that possibility of breaking out. We suddenly just start pumping. But, getting into a long as you're pumping into resistance, it's just not the best deal, right? At least for me anyway. Throughout the last few days, we understood that, this zone was the best zone, in my opinion, throughout last week to attempt that short position. Anchored VWAP, it is a swing short potential. I mean, this is one of the shorts that does have the possibility in coming down to 60K. It will take a couple of weeks if it is going to come to fruition. We're at the lower high territory, right? Can we form a lower high here, so we end up breaking down in a wave 3 in the next coming days? It has the potential, but it's dancing around. It's teasing with the bearishness right over here, getting these pumps into the value area high again. There is actually some local good news for the bears, something that is in advantage for the bears here, very, very locally on the lower time frame, which is getting some pretty decent bearish CVD divergence from the peak high that was formed yesterday. As you can see on the divergence here, Bybit US dollar tether and other exchanges, not so much on Bybit US dollar perpetual. There's more shorts coming in here, not many, but we do have lower highs on price action with the highs from yesterday and some decent higher highs. So, and there's actually longs coming in throughout the last few hours. So there is, longs coming into resistance, which can, the perfect scenario eventually for the bearish case is that, all of these longs entering throughout the last few hours are naturally going to have their stop losses, either under this low, right, and somewhere in this territory, because people are longing here very, very much. You got lower highs on price action. Longs are not powerful enough to break this very solid resistance. So, can the bears step in the next couple of hours and actually, roll down to sweep up this low? It definitely has the possibility, but the price is really trying to grind here to the upside, and does it get the pop or does it start rejecting very aggressively? We need to discuss the Elliott wave scenarios naturally in the next coming minutes, but I think the most important zone to analyze is really this pump. Okay, that's what we got left, new information, because we've been going through the 1 hour time frame, the 4 hour time frame, understanding this range, the fractal, is it bearish or not? It looks more bearish. It looks better for the bears, right? As technical analysts, right, it does look better for the bears. Now, when you ask me for new positions in this territory, where we at right now, it's just, I would rather attempt shorts, if I'm honest with you, even though it kind of looks like it wants to pop, but I would rather attempt shorts here at the resistance instead of longs, understanding that yes, we could pop out, but just at the end of the day, we just get stopped out if you attempt any new trade here. But it looks more lucrative for me for a short position in this territory. But of course, best zone to short was last week here as a bigger trade in a possible 3-wave structure, anchored VWAP, looking for a bigger pullback. And the best zone for longing was either Sunday evening or Monday morning, right? I have that stream from Friday where, you know, we are expecting likely a bounce in this territory here at the 66, 67K zone. Of course, that's like a few days old already, right? So, yeah, but understanding where we are at the moment, you know, new possibilities. Obviously, best zone to short, best zone to long here in this channel, either the breakout or look for that double triple bottom situation here to get into that long. And, you know, if you ask me, if where the price is right now, understanding the lower time frame, it looks better for a short. You got a little consolidation here where you do have a high volume node from yesterday's little mini range, just a mini range right there, which is where the price is actually getting some resistance with this pump. So this is naturally all of this messy, choppy structure, you know, preferably you do get that pullback from this zone for the bearish case, of course, right? Even for the bullish case, it would be better to continue a bit of the range if we are considering this an impulse. So, but where we currently at right now looks better for the shorts. When we do take a look at the session volume profile here, and we take a look at the high volume node that we do have in this territory from yesterday, well, you can see previous day value area high. You can see that shadowed high volume node right over here, okay, which is from this consolidation we had yesterday. That high volume node is literally where we just wicked into about an hour or 2 hours ago. You know, giving that kind of aggressive short entry if you want to try and catch the pico top, right, of a move before potentially, you know, rolling over. Naturally, you know, this momentum, is it bearish? Is it bullish? Bullish scenario would be forming a 1-2, okay, and another 1-2 here, and then, you know, ending breaking out. So your invalidation here for the, you know, local 1-2s, you know, would be this one over here. But yeah, this is literally coming into resistance, which is from the consolidation of yesterday. You can see that high volume node, and, you know, preferably this zone does reject, especially for the bearish case. But the bears don't have too much options here, based on the fractal that we do have from 2022. You know, very similar price action as Devil mentioned in today's morning update. And when we do consider the price action that we got here, this is looking at the 15-minute time frame from the highs created at 74K. This was last Wednesday on the 4th of March. This looks pretty impulsive. This does look pretty impulsive, okay? You got a few 1-2s, the wave 3, and then the 4-5, of course, okay? And it does look impulsive to the downside. There is a bullish case, which is, you know, we'll discuss that later on. We were discussing it throughout the last couple of days, but it's finishing a C wave of a running flat. Now, preferably, this movement has been a correction. I mean, this is the confusion right now, right? Very grinding structure to the upside, which you can fit a WXY double zigzag, okay? And you can fit an impulse as well. A few 1-2s, a 3, a 4, and 5, and, you know, possibly a flat, of course, in this zone for the bullish case. So, bearish case, you know, naturally we're looking at an impulse down, and we're looking for a WXY, okay, double zigzag, which I do have it on a folder here, but we can use the drawing here right away just to point that out, okay, where you do have a 3-wave move to the upside. We ain't going to do the micro counts, no need for that. And then you got your running flat for your wave X, and then another push up and down and up again. You have that flat here in the middle, okay, as your B wave. So there is a double zigzag here formation. We would have to see this as an impulsive move down, which all of this has to be part of a correction, because you do have a nice 5-wave move to the downside here. However, you got a bounce and then another low, right? And it's like very long, very choppy. and very disturbing. So on the bearish case scenario, impulse down, and here we would be looking for a possible ABC flat, okay, expanding flat situation. So it really wants to reject at this zone if we are looking for the bearish case, which this would be a wave 1, okay, expanding flat, coming to the 7/8 Fibonacci, really squeezing it here, all right, for the lower high, because you know when you start getting to the 0.88 or almost hitting the high here, it reduces the probability for this to be a wave 2. So in that or a wave B, of course. So for the bearish case, this is a failed point where a lower high could form, and in the next coming hours, right, you know, you end up rolling over to the downside. That would be the bearish case. For this bearish case scenario, your invalidation is taking out the highs, basically, right? Taking out the highs at 71.7k, the highs that were created yesterday. We're coming into that resistance as explained on the session volume profile. So there is some resistance all the way up here when we do take a look at that mini range, okay, from yesterday. High volume node that was actually rejected, but to the T here, as you can see, just wicked above it. Very valid for a entry scalp, okay. This is a zone where if you understand that, you know, you're looking at this movement to be a bearish impulsive move down for your wave 1 or your wave A, preferably most bearish scenario for the people that are short from higher, such as myself. Heavier in short than in long, and obviously I would prefer the bearish case, just because, but even though not because I want to, it's just because the charts look better for the bearish scenario. So wave 1 to the downside here, and the WXY double zigzag as the correction, which has passed the you know, minimum time Fibonacci, which is the 382, okay. After, you know, crossing the 382 time is kind of a minimum requirement, because over 75% of the moves, you know, in the corrections after an impulse do cross the 382 Fibonacci. So that's all good. We know that the correction, if this is an impulse down and this is a move up, it can be finished here, right? Just keeping it as in it can be finished. We never know at the end of the day, but considering timing, this looks like an impulse. This could be counted as a double zigzag. We got an impulse down here, and we got a very cheeky flat scenario potential, okay? Or even a WXY where you have a 3-wave. You got a flat zigzag down and another zigzag to the upside. Very possible. We're just looking really for this to, you know, preferably form a lower high here for the bearish scenario. When you talk about best entries, right, for this trade, just to manage risk like a beast, which is what we like. Hang on a minute, my camera here. Not that you probably want to look my face too much, but anyway, regardless, I just kicked the tripod there by accident. Nobody cares, but I do. So the preferred scenario for the bears is literally that lower high in this territory. Of course, you know, when we talk about how to manage risk like a beast, you know, that point of control that we had from yesterday from this range, that high volume node is a bit of a sniper trade. It is a sniper trade. You touch the level, you get above the level, entry, stop loss, right? And now you know, you could be running that trade that could bring great rewards in the next couple of days if it were to form a lower high, right? This is like really trying to detect if this could be the top, right? But that's obviously the best way, right? Even protecting right now, because you don't want that local high to be hit. I would personally still consider, I would still probably consider another high, because if we are discussing that this movement down has formed an impulse, okay, from yesterday, it does look like a nice impulse. However, you got a bit of a mess here later on, taking out the lows. So what fits in better is a flat scenario. In a C wave of a flat, you want a 5-wave move to the upside. So if we do tackle these local highs in the next coming, maybe not minutes, but maybe in the next 30 minutes or so, if we do tackle this high, I'm going to say that it's an acceptable local double top, because it might just form that, okay, contracting diagonal to finish that ABC flat, right? Where you got your A wave, your B wave, and a C wave right there. And it just has an ending diagonal, which you have your wave 1, your wave 2, okay, your wave 3, wave 4 right now. It just forms a higher low and it tackles again the highs and it creates a double top just to finish that ABC flat, okay, in an ending diagonal, which, you have a 1, 2, 3, 4, 5. Maybe you got one more high here. It looks like it's going to break, but then it actually double tops, right? And then takes that pull back down. So I'm going to say this is a very valid entry to really like detect the highs. That is if the highs is not in already, because, I'm just talking about, brainstorming here, a potential, a possibility. But still the highs could be in based on, instead of being an ABC flat, forming a WXY, where you have a 3-wave move here, okay, in that flat on its own, and then a 3-wave down, and then a zigzag up here, okay, to finish your Y wave, WXY. A bit of a complex, rangy structure after that impulse down, right? So it has the potential already of the high being in. So just in case, we're surprised on, price ends up rolling over, I thought, I was looking for that ending diagonal for the flat to get into the double top, and I missed the trade. Well, that would have been your best entry based on the reaction of the point of control that we had from yesterday's range. So, as mentioned, this does have the potential to be at a local high and get that movement to the downside in the next coming hours. If not, take out the high again, and this would give you the option of a double top scenario. That's if the high is not in already and we start rolling down from here. So, in this zone, shorts are much preferred naturally than longs. For the bullish case scenario, I very much prefer the bearish scenario. Okay, it would be ideal, as explained, to form a lower high in this territory here at the 71k zone. There's bullish case scenarios, of course, right? We can't always be a bear here. I like being a bear. I like being a bear in the bear market, right? What can we say? So, but we look for intraday setups, right? Regardless, longs or shorts, right? Last week was mainly looking for the shorts on the rejection. And on Friday, we were very much aware of, we're likely going to get a bounce here, right? At the 67, 66k zone. So, regardless in a bear market or not, we look for, either longs or shorts locally. So let's discuss the bullish case. I don't think we need to zoom out. I will zoom out later on the stream to talk about the fractal, talk about the bullish and bearish case scenario based on the bigger moves, right? Based on the bigger moves. All of this is like looking for little pullbacks that has the potential of going lower, of course. And now I'm going to discuss the bullish case on the lower time frame, which, just so you understand, that if you have a 5-wave move down, which we discussed yesterday, it has to be part of a flat, okay? This does look very much like an impulse. So how come you can finish an impulse down and then the price, reverses and takes out the high? Well, if you have a flat structure, which in this case, we would have to fit a running flat. This is your wave 1, of course. That's your wave 2. Then, naturally, we would be looking for an impulse up from here, right? So this is why, we need to talk about the bullish case, right? It is possible. This is countable for an impulse. And that's what we're going to discuss right away here on the 15-minute time frame. We ain't going to zoom that close. But an impulse here can be fitted nicely. You know, you got a couple of 1-2s here, couple of 1-2s with this local little move. Then you got the second 1, 2, 3, 4, 5. So your wave 3 easily finished in this zone. That's your wave 4, which could be a triangle or a flat, doesn't really matter. But then your wave 5 finishing in this move up here. The main thing why I would finish the wave 5 here is because of this really strong spike up, and you can't fit something nice as an impulse, as this movement down did take out this low over here and then took out the high. So 5 needs to finish here, and that's when you come to the conclusion of, all right, well, you know, if this did take out this low and then take out the high again, a flat here is what looks best, okay? Because we do have that impulse to the downside that we've been discussing for the bearish case, but let's just discuss the bullish case here, because you can fit an impulse to the upside here, and you can fit a running flat here to finish a move here. It doesn't look great, right? But we just brainstorming the possibilities for the bulls, because we can't only be bearish. This has to reject. We need to form a lower high from this zone. It's bearish. Look at the fractal from 2022, even the fractal from, you know, a few months ago, right, which looks extremely similar. We were taking the bars pattern from this, you know, range, and the similarities that they are from this local range of the last 5 weeks are, you know, pretty damn insanely, you know, similar. Okay, when we do squeeze that here and we fit it with this zone, it's just very similar, right? Just a 3-wave structure here to the upside, and you know, naturally the corrective bounce here just to follow through later on, right, in the coming days. Looks more corrective, right? But you know, there's always a bullish scenario, right? There's always a bullish case, and we might be surprised when the bullish case does play out. This is why risk management is your best friend when trading. We can't be overconfident. I'm feeling too overconfident in the bearish scenario. Not, you know, that I would go in extremely heavy on a short where we are at the moment. Level to go quite heavy was that anchored VWAP, which I still I still remain in that short. I haven't taken any profits. I'm gonna you know, see if the bears do fight from here, because it's one of those trades. I don't have a clear heavy entry here. You know, you can get into a, you know, a smaller entry. As explained, there is the potential of forming a local lower high here, but you know, having this trade such at a very good entry, you know, I'm relying on the bears in the next coming hours to really roll over the price action in this zone. If it does, you know, I will obviously get stopped out at break even. Profits were taken on this short just because it was heavyweight, and but I'm not going to take more profits just because I do see the potential here for the bears, right? The bears do have that potential. This is a swing trade naturally, and they do have the potential, as explained, to form a lower high. So I don't want to take more profits. I want to leave some heavyweight position here because I know it can roll over in the next few days from this point and form a lower high. Okay, it very much can do that. And you know, if I take most of the profits right now from that short, okay, that was from 73k zone, the rejection from the anchored VWAP, and the price ends up rolling over in the next, you know, couple of days, you know, I'll be like really frustrated, right? Just because it was a very good position. There's no need to close just as of yet, and the possibility for the bears are really still there. Basically, they are really there. So going back through the bullish scenario, I have to say, because this has the possibility of being an impulse, with this high, not with this one. It doesn't make sense with this one over here to have a 5-wave from this point with this wick down, and the wick up, of course, taking out the high. So an ABC flat here, because we have that impulse down from yesterday right over here, which we are, you know, counting on the bearish case scenario that I've just explained, either a flat here or a WXY. Preferably for the flat, you create one more high to form that, you know, ending diagonal in the wave C, right? Getting very, very close to the highs and just ending up, you know, really rolling over later on here. So it's a very good rejection point for the bears, I have to say. Okay, it is a very, very good rejection point for the bears. Naturally, the best option, you know, for that epic short would have been, you know, that rejection at the point of control of that mini range of yesterday, for an epic entry, right? But there is a chance of a double top. Okay, so it's something that we just need to be paying attention now throughout the next coming minutes, right? If you form a higher low from here, right, you could form an ending diagonal in that ABC flat. So a double top from here, right, just really squeezing. There are very strong bearish CVDs from these two pivots, lower highs on price action, and you know, there's nothing that has 100% accuracy, right, in trading, either Elliott wave or probabilities. You know, you can have a 90% probability based on timing, Fibonacci, you know, the waves that you have hitting resistance and bearish CVD divergence, and the price doesn't care about your probabilities and all of your, you know, technical analysis. It ends up, you know, breaking out, right? So the CVD we do have some pretty nice bearish CVDs. We do have local bullish CVDs. On Bybit, they are shorting that right now. They are shorting. We've got new 2 million shorts on the delta. So there's more short entering here on Bybit, which is creating those, you know, extreme lower lows, as you can see in the yellow, right? We do have those lower lows, higher lows on price action, new lows that could take out those local highs. But let's not forget that you have Bybit US dollar tether and most of the exchanges also higher highs on CVD from yesterday's highs. This is why it is extremely lucrative to, you know, either short that point of control that we had from yesterday from that mini zone here, as explained, with those bearish CVDs. However, if the price were to take out that local high again, holy smokes, the bearish CVD divergence are still there. You're just, you know, taking out those shorts that are entering on Bybit here very aggressively. And, you know, this is a good double top based on, you know, all the information that I have. Looking at Elliott wave theory, okay, you can fit in an impulse and you can fit a flat with an ending diagonal, one more high, you know, and bearish CVD divergence. And you have the higher time frame bearish case scenario, of course, that looks more attractive. Naturally understanding that this could also be a WXY instead of a flat. Instead of finishing here in a 5-wave move up, you finish in a 3-wave move up, because you have a flat here, zigzag down, zigzag up. You know, it's a little bit overextended. A WXY doesn't usually move like this, like in a flatty scenario, but it's very much a possibility. Okay, so going back to this bullish case scenario here, where we do have a 1, 2, 3, 4, 5. It is true, because of that impulse down that we got here, that it fits nice to have a flat here. So let's just put that flat right over there. With this flat here, it is quite quick, I have to say, you know, and you did take out the lows again. So having a WXY fitted here is what makes more sense. Yeah, I mean, this does look very much like a flat structure. But yeah, we're just breaking down here a little bit here. This would be a wave W in that flat, just because this is too soon and you did take out the low. So having a wave W here, this preferably would still be a wave X in another flat scenario here. If the price does range throughout the next 24 hours, you could be forming a WXY here for the bullish case. So looking at this as a wave 1, flat W, wave X, another flat, maybe extends a little bit longer. If you do form a triangle here, it's likely going to be bullish. A, B, C, D, E. This would have to be the, yeah, wave X, A, B, C, D, A, B, C, D, E. One more low, of course. You know, if you start forming a squeezed triangle in this territory to finish that Y wave, then this is probably going to be bullish. It probably will be bullish. So if this squeezes in the next 24 hours, right? If you like consolidate, you have lower highs and higher lows, the bullish case scenario, you know, would be popping out here, breaking at the end the value area high of this entire trading zone, and just, you know, maybe breaking out aggressively in a wave 3. I'm not really leaning on the bullish scenarios, guys, but it could be possible. And one possibility is forming a bit of a triangle-y structure here in the next 24 hours, right, coming into tomorrow. If that were to be the case, then, you know, I think it would be not a bad idea to look for a long position. If you only form the triangle, okay, that's only if you form a triangle structure. You need a couple of lower highs, a couple of higher lows at this point. And then, you know, naturally, that's the moment of decision, right? You can have very, very good invalidation, very, very good stop loss, okay? And you could, you know, it could just end up breaking out, right? This would be a good entry, spotting the E wave, spotting the 5th wave of the triangle with a very, you know, the higher lows of the triangle is your invalidation, and looking for that pop out here. But of course, we need that triangle. We need that triangle formation that could take, you know, up to 24 hours naturally. Because there's another corrective structure that needs to be added. Of course, you do have a flat in wave W, all right? Another flat here would be in your wave X, and a triangle here could be a possibility. You need the triangle to really, you know, speculate on the breakout, of course, to the upside. This would be your wave 2. And then, you know, things might get extremely punchy to the upside, and, you know, being bearish all week based on the higher time frame, based on the fractal, and then it ends up breaking out. So we don't need to, even though the charts might look bearish, we can still take long positions with the new information that is given, okay? New information given. Oh, you know what? We do have an impulse to the upside. It can be counted as an impulse. You have a flat, you have an X. Do we squeeze in a triangle here, and it just forms a WXY for that wave 2? You know, it could be interesting looking for longs, but this would require many hours, right? At least, you know, easily this is the 15-minute time frame, at least 10 hours or so into tomorrow, right, to get this triangle looking structure. Which would be looking to finish in a Y wave. Another scenario that, you know, could develop as well in the bullish case is, instead of forming a triangle here, you form a little bit of a sharp zigzag to the downside to finish your wave Y. Let me just clear this. I always have problems here with my drawings. A lot of people, not a lot, but a few of them said you're an artist based on your drawings on the chart. Being sarcastic, of course. So with that ABC flat, that could be your wave W here, that wave X here also, either a WXY or a flat. A zigzag down could happen in your wave Y because you formed a flat NW. So taking out these lows, we do have slightly lower. There is a weekly naked point of control. It's basically almost the point of control of the entire range of this structure. So there is a weekly naked point of control here, which is just where we have these higher lows. I'm not sure if we would go down that deep, but this would be a very, very lucrative SFP territory. Those higher lows that we do have from the 9th of March. And when we zoom out, it's just getting a few trading plans ready, guys, okay? It's getting a few trading plans ready. It's, you know, slightly below the point of control of the entire range. But if you do get this range, you know, on Binance and some other exchanges, that you do have that weekly naked point of control at 68.3K, basically. Could you still form a corrective structure here? Absolutely. I mean, this could extend still a little bit longer based on the flat wave X and a zigzag down. It might look very bearish, but you're just sweeping up the lows. Preferably the best zone would be these higher lows where you have that weekly naked point of control. So it ends up in a fake out of the lows literally, and then forms bullish structure. There would be many ways to get into this long position, either an SFP from, you know, the weekly naked point of control, or just flip some bullish market momentum structure here, which is not going to be easy to identify. But overall, you know, this is a little bit of what could happen here still locally. The range could extend a little bit in the bullish case. I would not expect a breakout from here in the next coming hours. Just because, you know, even though if you do have this flat scenario, you can't pump up from here because you've taken out the low. So you need to combine a WXY here of some stage when we consider the impulsive move to the upside. So yeah, this could probably still range for the next 24 hours, you know, form a triangle, even take out the lows here potentially. In the bullish case, I mean, it wouldn't make too much sense to actually pop out from here. So it's, you know, it's going to be our job to actually detect that possible triangle, which is possible in that WX, okay? And you have form your Y wave in that triangle scenario here, and then it's going to be interesting to look for longs if you form that triangle here. Very good invalidation, the lows of the triangle, and, you know, give that possibility for the bulls to break out here. So that's a little bit, I know Elliott wave theory can be a little bit of not nice, too many scenarios. But yeah, a zigzag down here to sweep up these lows can also form that Y wave. A zigzag, it could be possible here between today and tomorrow. I would be looking for an SFP of this low or an SFP of this low, where there's a weekly naked point of control where we have these lows. So that's even better. Point of control of the entire range is coming in where we have the recent lows of this morning. So yeah, I mean, there's a big volume profile here. Point of control at 68.9. We missed it by a hair early this morning. Not that early. This was midday actually, Central European time. But yeah, a wick to claim liquidity. You got big point of control of the range. That's the range of the last 5 weeks, and there's a weekly naked point of control just beneath these lows that can be treated as SFP levels, considering the bullish case. Because it's, you know, I can't get into a long here. I just can't. I cannot get into a long. If I, you know, we need to talk about longs naturally as well, because there is a bullish case. There is an extended range of the correction, where, you know, it's all about being patient and understanding the levels. You know, it would be nice to be long from here at this point, right? Well, you know, let's talk about how the price could develop and which are the levels of interest to get into that new trade, right? Long position in this case. I would have to say, you know, an SFP from this low, you know, sweep that low, reclaim it, is a very, very valid option. because you have the point of control of the entire range here looking at Coinbase chart. Very, very solid level, which we just missed by a hair today, not by much. And the price could come back down there. And in the bullish case, well, naturally, you know, you're just sweeping up that low. This ends up being an impulse. This ends up being a corrective structure. You know, naturally, where I would want to long is at the lows, basically, where there is strong support, that it's getting a reaction bounce. Okay, so alert set at this zone. Okay, alert set at this zone makes sense for looking for longs, because, you know, we want to long from lower. When you're longing into resistance, it makes it a bit challenging naturally. Yeah, that's basically it. Two main levels that I would be paying attention to see proof of support, point of control of the range with that recent low of today if you move in a zigzag to the downside. SFP, point of control, reclaim. That could be an interesting long, because what we would be looking for is that WXY. You're just forming your Y wave in a sharp zigzag. SFP, if you don't SFP from that point of control of the range and those higher lows of today, the next ones I would be looking at is this one, which is at 68.3k weekly naked point of control. That's where the price could get the reaction if this level does not get the reaction. So there's two main levels here that I would look for a long entry on the reclaim. Reclaim naturally is getting back above that pivot just to manage risk. You know, these kind of trades are looking to take out the highs, right? I don't need to risk a huge amount on these setups, right? It's either this one or this one that I would be looking for the long setup, understanding that there is a bullish scenario, 5-wave move up, and there is a WXY scenario. This could form a corrective range, and, you know, we end up breaking out in the next few days. Corrective range here doesn't look finished, what I explained. So forming a range, either a triangle or a zigzag down in the bullish case, still makes more sense instead of rallying here and breaking out from this point. It just doesn't fit nicely when we consider Elliott wave theory. So extending the range for several more hours makes more sense here. As explained, I can't fit a solid correction down here at this low to be finished to then start spiking up. Okay, so the plan, you know, that's basically the local plans. What can I say? Local plans for new entry points, unless you're an absolute sniper trader, you do have that, you know, mini range point of control here from yesterday's price action that got the rejection. Really, you know, really nice for an entry basically on the rejection. Stop loss, you know, very small. Bearish case scenario, if you're not short already, I would remain a little bit patient to see if you do claim that high. There is another double top possibility here based on the ending diagonal, okay, for that ABC flat for the bearish case, right? We're looking for a wave 2 and then ending up rolling over throughout the next coming days, which would be very nice indeed if we get that local double top. Maybe you're in a short position already from this, you know, point of control and you got an epic entry. But when we consider new entries for the viewer here, a local double top is very valid, very valid. So that's basically a little bit of the plan here if I wanted to get into a new trade. Double top, you impulse down, ABC, flat ending diagonal for the C wave, one more high, and then start rolling over, of course, naturally after a few hours after those highs are taken. If you break out, there's no short. If we break out from the recent highs, take out these highs, there's no short. An SFP from here would be a little bit skeptical about a short entry here, but yeah, naturally the highs of yesterday could SFP at least very locally. Okay, so it is a valid Let's leave it as a valid entry point for a scalp, even though you can form a higher low and break out later. But they're valid. This is a very valid SFP, just because of the amount of resistance that there is in this zone. It's the Valley area high, which we are attempting to break, right? And you can have a few attempts hit yesterday's highs. So it is I would say it's a valid entry point. And yeah, that's basically it, right? For new shorts, double top locally. If you break out, you could SFP from this high. That would be a possible entry point. Very solid levels is 72,500. There is actually a daily level and naked point of control at 72.5k here. When we do take a look at Fibonacci from this pivot high to the low, the 7/8 Fibonacci is slightly lower. So it would be nice that the 7/8 Fibonacci would be in confluence with those levels. I'm a little bit skeptical about the 7/8 Fibonacci here for the short. I mean, in some cases, if we were to get up there, 7/8 Fibonacci might be the high. But yeah, I'm not that interested in shorting the 7/8. I was yesterday. Valid for a short entry, double tops locally here. We're likely going to reject. We're looking for something ending here very, very likely very soon. So SFPs from these lower highs are good. Local double tops for an entry is good. If we stretch out a little bit more, 7/8 Fibonacci is going to be a good option at 72.2k. But today, after this pullback, if we were to move up from here, I'm not that interested. Wouldn't be that interested. Daily level and naked point of control at 72.6k is a reactionary zone, right? That naked point of control is literally from that range, basically. My mistake, it's not from that range. But we do have a naked point of control right there. That was from last Thursday. Valid for a reaction trade. You get above it, you get rejected. On the rejection, it's a sniper trade basically. So let's dive in through. By the way, guys, today Devil has been absolute legend with the updates inside of the trading community. If you are interested in joining the trading community, it is super simple to join. Just send me the word access down below in the Telegram. Okay, you just need to sign up throughout one of the affiliate links, do a minimum deposit for your own trading, and we'll jump you inside of the trading community. Good news or bad for price action. We'll go through the comment section right away, okay, guys? We'll go through the comment section in an instant. Bullish scenario requires a little bit more of a rangy structure with the potential of taking out the local lows, as explained, okay? This has the possibility of being the high, and there's no turning back. It does have that potential. If you can form a double top here for that ending diagonal. I would still consider a local double top for a short here, only if you double top. Okay, it's about executing the trade and managing risk. It's not about being right or wrong. It's understanding the potential of this forming a lower high here, and where you want to manage your risk, where you want to put your stop loss, where you want to enter. Right, it has the potential of doing this, so I want to enter in this zone and I want to manage risk. I don't want to add to shorts because I'm bearish and it's going to roll over at some point, because then the price moves up and then you want to start blaming people here. Manage risk at all costs, guys, right? So now for longs, I have to say, I need a triangle here. I need a triangle. That is, if we do range from here and we form a triangle, I understand that you could form a WXY here. If there is a triangle formation in the next 24 hours, we need at least 2 peak higher lows, and from this high, of course, 2 peak lower highs. that is the moment that we can really speculate on a triangle. Okay, having those 4 waves, 2 peaks, higher lows and lower highs, there is a very, very solid way of getting into a trade on a triangle with very good risk management. And this has the potential of breaking out, of course, taking out the highs here at 71.6 and even popping out to higher levels. That triangle would give a very good entry. Okay, you do have a bit of a room of entry here, very good risk management. And there is a combination with Elliott wave theory of a WXY, right? Flat, wave X, and a triangle. The other scenario is forming that zigzag. This was explained before, but you know, some people coming in here, you got the flat here in W, your X wave, and a zigzag down. You can form a zigzag here because you have a flat in wave W. Because we've hit the 7 Fibonacci from your wave W, if it were to be a zigzag, okay, which is not, it's a wave W. If it is a zigzag down in wave W possibly, right, and another 3-wave structure in a wave X, then if you hit the 7 Fibonacci, it decreases the probabilities to form a zigzag down, okay, for that double zigzag. So naturally, you know, with that said, but if you have that flat in your wave W and you hit the 7/8 Fibonacci, you could still zigzag down just because you have a flat in wave W. So with that zigzag down, the only zone that I would be interested, you know, is really failing to break out the recent lows and look for, you know, then obviously the reaction is important for an execution long. If that level doesn't hold, then the weekly naked point of control with these higher lows would be the option at 68.3k. There's only 2 zones that I would want to get into a long, which is SFP from here with the point of control of the range, or the weekly naked point of control with these higher lows at 68.3. So it's 69k that holds, or 68.3. These are guidelines. If you're below it, I'm not interested. If we get back above it, I would be interested in that sniper trade. Good risk management, of course, to maybe look at this as a corrective structure to then move to higher prices. Only zones of interest: local double top for the ending diagonal, point of control of the range, weekly naked point of control, and that has to do with the WXY or a triangle. We need to wait for the triangle, of course, to say, okay, it's forming a triangle, WXY, you know, then look for the pop out. And for shorts, double tops locally here is very, very valid. That is if you did not take the short at the point of control that we had from yesterday's mini range, right, which rejected very, very nicely as soon as we tapped it just a few hours ago. Let's go through the comment section. I'll be breaking down a little bit of the higher time frame scenarios, guys. Okay, sorry about that, being a little bit too... I just want people to understand a little bit of this zone. It wouldn't make too much sense to break out successfully from here, okay? It makes more sense to continue a bit of a range or move down from this point. Okay, so longs here, you know, not too attractive for me, based on understanding that there's a higher chance of moving down or even ranging still. That's for the bullish case for the triangle. So longs here, I cannot take a long here. I cannot take a long. Would be more interested in shorts here, very, very locally. So let's break down a little bit. We'll be breaking down the higher time frame. I'm going to go through the comment section, of course, just to say hello to the absolute legends here. Much love to everybody. Let's dive in through the comment section, see what the people are saying. We had to do the local price action, guys. Levels of interest, possible pattern formation, local double top. Bears, you know, ideally form a lower high here, and we start breaking down in the coming hours. You know, that's going to be whoever managed to get into a short at higher prices is, you know, obviously much better. Shorting down right now here after almost $1,000 move down, right, with a stop loss here. You know, it's not just, it's not great. You know, you're having a little bit more exposed as a stop loss. So you know, catching that naked point of control would have been the best scenario here, to get into that short, really, just to get a better entry and better risk management. Let's go through the comment section. We're going to break down, of course, the hourly time frame, guys, and the 4 hourly, 1 hourly time frame to understand the bearish option and the bullish option, because we literally only have two from this range, where there's no more combinations. As this range was developing, you have many combinations, and we literally have two right now. One is the bullish one, one is the bearish one. The bearish one looks better, and the bearish one wants a lower high in this territory from the highs of 74k. So, you know, let's see if that comes to fruition, of course, in the next couple of days. It just looks better, guys, and we can show you I can show you fractals from the last few years, and also, well, basically this fractal over here from a few months ago, which just looks very, very similar. Is this time different? Is this pattern different? And the lower percentage probability, which is the bullish one, plays out. We shall see, right? Maybe it is. Anyway, let's go through comment section and say hello to the absolute legends. How to destroy America. Let everyone in that. Well, we're going here with what's going on. What is the discussion? Let's go through comment section. Mariela. It's Thursday 12th, Andy, for breakfast today. 7:50 a.m. here. Oh, nice. Mariela, absolutely epic. Early morning for you. Much love, Mariela, giving that love and support. Okay, comment section time. Comment section. What's going on? Can we double top and still be bullish, or is that an invalidation for the bullish case? Very good question. Could it double top here locally and still be bullish? It could naturally still be bullish. You know, even though if you take out this local high and correct down. Other combinations that I would have here for the bullish case, that would be your wave W, your wave X. Taking out the highs and your double top. You know, I would say that it would be looking more bearish. If you double top and you reject here very aggressively, of course it can still be still bullish, because when we talked about this flat here for wave W, okay, and if you know a flat here for wave X, you could still be forming a larger range here. So at the end of the day, you're looking for that flat here with an ending diagonal, okay. You can still double top to finish the C wave in an ending diagonal of this flat, get the retracement, you know, zigzag in your wave Y, and still be bullish. So yeah, if you double top locally here and you reject aggressively, it could still be bullish. Okay, still be bullish, because it would be just a possible flat here, flat here, ending diagonal to finish that C wave, and then maybe you form the Y wave, either the triangle or either the zigzag down. You know, maybe take out this low. You know, you're looking for a reaction here where you have the point of control of the entire range. Naturally, it would be the most lucrative long, because you do have the entire point of control of this range to support you, right? This is a very, very solid level, of course, at 68.9k. So, you know, faking out from that point of control and reclaiming it on the lower time frames is going to be, you know, the bullish option, in my opinion, right, to get into a long. So yeah, that's, if you take out local highs and still move down, the bullish options are still valid. When 60k, I need to spot. Yeah, I do have some dollars on the sideline, because I want to buy below 60k. You know, I don't think that this is the low of the bear market. When we look into 4-year cycle theory, a lot of uncertainty around the world, of course, well, mainly Middle East, but it doesn't make sense anyway. Looking at the structure, the only bullish case scenario when we consider Elliott wave theory is having an ABC flat here, right? Finishing in a 5-wave move down for your ABC, your C wave right there, finished, right? That's if we are really surprised that, you know, price really starts gaining momentum in the coming months like crazy, and then, you know, then it's going to be like, holy smokes, you know, maybe this was the low. But it doesn't make sense for that to happen considering 4-year cycle theory. You do have a 5-wave move down here at the, you know, it could be a 5-wave, it could be a double zigzag. However, the double zigzag still needs a, you know, the correction and the move down. It wouldn't make sense for this to be a flat. Currently where we at in this cycle, okay, very beginning stages, well, mid stages you would say of the bear market, not beginning. So I do expect $60,000 at some point to be hit this year, sub 60k, and I think that would be an awesome moment. We could have a few months to weeks or months to DCA. Hopefully we do get below $50,000, but the moment we break down $60,000, whenever that happens, if it is going to happen, I think, you know, it's going to be a good moment to DCA, right? Because, you know, Bitcoin is bullish long term. There's no doubt about it, right? And you know, that the problem is when you're in a bear market, right? You claim the lows here, for example, and then you claim the lows again. You know, there's just going to be certain months to buy cheap. When we consider the 4-year cycle theory, a lot of people were wanting 10k here at this point. I remember back in the bear market, you know, you had a lot of posts on X, you know, and on YouTube, people that are very, very bearish, calling for much lower prices. You know, 10k never came, right? Never came. So the strategy here for me is I'm going to buy on spot as soon as we touch below 60k. I'm going to, you know, allocate 5% of my cash as soon as we get down there. And then, you know, if we do continue the momentum to the downside, naturally DCAing more and more as we take out the lows. This cycle, I only sold 25% of my entire spot bag, but every time we took out the all-time high of 2025, you know, I was, you know, scratching a bit. The most that I took out was at 125k, which I sold 15%. This was mentioned on a live stream in October of 2025. If you do take a look at the live stream that we had here throughout the first week of October, as we were getting into 125, 126k, I was very vocal about it, about saying, guys, we've hit all-time high again. And, you know, there's a lot of people talking about 160k, 180k Bitcoin. You know, we still have a few months of uptrend. You need a DCA out here, and this was the most that I sold, which was 15% of my entire spot, was at 125k, and this was mentioned on the stream here. I was like, guys, I'm selling spot here. So the same will apply based on buying on spot. I've already bought decent spot here as we got the 80k lost, and I'm still, obviously this is DCAing, right? 10%, 15%. If we take out these lows, you know, I'm going to DCA very aggressively still in this zone. So anyway, that's a little bit of the strategy here. Just continue buying as we go down regarding spot, but spot is boring. Diamond hands, right? We are looking for trades. We're looking here to make gains week by week if we can, with trading, of course. Legend always said he'll sell a BTC around 120k, and he did. Mariella, much love. Is alt season yet? Is it alt season yet? Just kidding. Much love, Mariella. Thanks for joining this stream. Anyway, which time frame is the best for scalping using range and level by level trading? which time frame is the best for scalping. I would say if you're scalping, between the 1 minute and 5 minute time frame, to look at the levels, okay, ranges, little mini order blocks. If you're looking for scalps, naturally the 1 minute to 5 minute time frame is best. I've lost very much interest on the good thing about lower time frame is detecting, right? If you have your Elliott wave theory analysis very much in place, I understand that the probabilities of breaking out from here are actually quite low. You either continue the range or you take out this low in the bearish case, okay? Even on a larger bullish case, breaking out from here is unlikely. And of course, which is the best level, where you need a high volume node, right? And the high volume node from yesterday is literally here. So this is looking at the 5 minute time frame, so I understand that little mini range from yesterday. It's an aggressive entry, and if you understand the structure and Elliott wave theory, you understand that based on what I've explained, you've had a flat here, you've taken out the low again here. There's nothing that combines a correction here as a zigzag when you want to take a look at an impulse here. So I understand that the probabilities are low to break out from here like massively, right? So looking for shorts at resistances such as this point of control, of course, it was definitely the option here to get into that sniper trade. Let's go. If no double bottom, where can we enter? If no double bottom, yeah, if no double bottom, no double bottom, where can we enter? I'm not sure where you are talking about the double bottom. Do you mean here? Double bottom from here? Or double top? I'm not sure if you are. We're in the same scenarios here. Baby Genius, much love to you. Thanks for joining. Jackie Wood Mother, always giving love and support. Lost a lot of interest too. What is the channel's name? Mind Pillar Markets. The YouTube channel name? Double top. Okay, yeah. Double top, sorry. I thought so. So yeah, what if we do not double top? Where can we enter? Yeah, for the shorts, I would say that this would be a local double top here, as explained at the beginning of the stream, is a good solid entry. Only if you do reject from the local highs based on that diagonal for the ABC flat. However, if we do not double top, where can we enter? That's a very good question. I'm not that interested in this swing failure pattern from the highs of yesterday. I have to be honest here, I'm not that interested. But if it, naturally, if we do get up there, it could just be a liquidity grab and you do get the pullback happening from here. So I would really treat the highs as execution levels based on liquidity grab. So if we don't locally double top from here, I would be looking for this high for the liquidity grab and then move down. If the price breaks out, doesn't double top locally, doesn't get a reaction at that high, the best level to get a reaction and a pullback, still to have a lower high possibly forming from the highs of last week at 74k, is a naked point of control that we do have here at 72.6, which is actually in confluence with a daily level. This is a reactionary zone where if you tap that level, you get above it, you get below it, it's a execution stop loss above the high to get into that pullback down. So that would be the best option if you don't, double top from this high. Because that's where you have more confluence, basically a naked point of control and a daily level. They're at the same zone, basically at 72.6k, which is nice to see, and that's like double confluence right there to execute that trade on the reaction. We have the 7/8 Fibonacci, which is in between. I would treat these levels, right? If you do reach them, right, naturally you're obviously being aware of the breakout. I would treat them as tap and go, right? Tap it and go. 7/8 Fibonacci is okay. There's not much confluence really there. I mean, it might be the value area low of this little range here, kind of the value area low of this little range. Not the best level, but I've seen the 7/8 Fibonacci being very, very good. And the best example that we have is this movement down here, right? We got the low to the high, and this low, I mean, it did bounce from the Fibonacci, from the pivot low to the pivot high. It did bounce exactly at the 7/8. And that's, there was a daily level. No, well, was there a daily level here? I think there was another. There was something down here, if I'm not mistaken. Yeah, there was a daily level as well as confluence with that 7/8 Fibonacci. Can't remember if we discussed this long position. Very likely. I mean, there's a daily level with the 7/8 Fib. That's the good thing about this 7/8 Fibonacci. You had a daily level as well to back up that bounce. So yeah, from these from the 7/8 that we have locally here, we don't really have much levels. We don't have much here. I mean, if that daily level was exactly at the 7/8 Fibonacci, then naturally it would be better. It is just slightly above the 7/8, a few $100. But yeah, the more close together that they are, the better, really. So those are a little bit of the levels, the scenarios that I'm looking for very, very locally. I want to break down why the bearish case for me is still the favorite. Let's break down here this 4-hourly time frame, this range, why it looks better as a corrective structure instead of something bullish. We're going to talk about it right away, okay? Wait for the highs. Yeah, I got it stopped out, and now I'm looking for re-entry with profits, but sad because this can be a good trade. Yeah, this happens a lot as well. A defensive trader can get stopped out at break even, then the price goes where you're looking for where you literally were analyzing for the price to go. What would be a stop loss if you short? Based on the short trades that I explained, if you double top from here, your entry is here, your stop loss is at the highs. Okay, always for this kind of double top SFP scenarios, you need the highs, you need the rejection to enter, and then stop loss is at the highs. That's where stop loss would be basically, because it's a fake out wick, it's a liquidity grab wick, and you want to, once that liquidity is grabbed, you want to get in on the rejection, and that high of the wick is your stop loss, right? It's a very, very solid way of getting into trading setups. Let's go through the 1-hourly time frame and talk about why still, even though we're pumping up into trying to break the value area high of this range, which is struggling very much. This is the failure point really for the bulls. It's a point of failure to form a lower high. Point of failure. I have to say, I'm very well positioned here with that short position from the anchored VWAP. It's still worth holding a significant chunk of that short position that was taken last week here. I couldn't stress this enough last week. I'm like, guys, I've been waiting for this level for a week now. I'm going to go heavyweight on this short position at the 73k zone, anchored VWAP rejection. And you know, it's still a swing short. You know, I don't have any strong reasons here to take the rest of the profits, even though I would still be happy. But, you know, it would hurt, you know, it's significant profits if I get stopped out at break even from this, from the rest of this trade. But this is a heavyweight position. You know, I was very vocal about this last week. You know, this is where I'm going to go in heavy, because I know that this has the potential of being the high. 3-wave structure, you got an impulse, even better. Now is lower high. You know, do we get this bounce being corrective? Which it does look, it does have the chance. So I want to hold on tight to that short. It's at break even anyway, so it's not about, you know, you are wrong. It's about, you know, I got a very solid entry, right? The entry is solid. The potential of how forming a lower high is there. I do get a few little people getting pissed off. We had one a few days ago. You know, you're wrong. This is bullish or this is bearish, all right? And it's like, it's about trade execution, right? It's about managing risk at the end of the day. We don't have a crystal ball, so we can understand probabilities. So the probabilities for me is that we ain't going to talk about the Elliott wave. You know, either an A, B, C, which both can be countered. Okay, in a 3-wave corrective structure, you have an impulse down. You coming into, you know, the bounce right now, struggling at resistance. For me, it looks better for this to be a potential wave 1, okay? And you need a lower high here for the wave 2, break down in a wave 3 later on in the next 1 to 2 weeks to take out $60,000. You know, we have the possibility here for $60,000 to come in days, even days. Okay, I would give it about a week or so if we are going to form a lower high here in a wave 2. This is the scenario that I prefer, just because it looks better. You know, I've explained the similarities that there are, you know, with this range, right? When you get the bars pattern, shout out to Devil, by the way, was talking about a very similar fractal here from 2022. And when we do take a look at the bars pattern from here, I've explained this at the beginning of the stream, right? It just, you know, when you, obviously it's a lower time frame, when you squeeze this in, okay, very, very similar type of, you know, corrective-y structure. Getting the breakdown, coming into the value area. Now, obviously, is this bounce going to be the bounce that, you know, ends up rolling down, just like we did right over here? Let's take a look at the price action from 2022 here and get that bars pattern, because this is actually also very, very similar. Bear market, you're coming in very aggressively. You know, let's just, you know, take a look at this, right? And take it with us to this zone over here. Just probably copy and pasted that instead of doing that, but anyway, it was fun. Similarities with that price action. Remember, this is November of not November. This was May of 2022. May of 2022 price action. And when we do take a look at this on the 4-hourly time frame, you know, yeah, it actually is pretty damn similar. But I mean, coming down even from February, you know, into March, of course, this range that we formed between February and March, the drop from January, holy smokes, this actually, you know, this really looks like the same thing. This does really look like the same thing. It's like scary similar. Scary similar here. So if you don't think that there's any similarities from this price action of May of 2022, then I'm not sure But then, at the end of the day, then it actually turns out bullish, and it might break to the upside, and you're like, hey, what happened to that fractal? Well, it's only a fractal, right? It's not. I prefer the bearish case. It does look pretty damn good for the bears. Going through Elliott wave theory, we'll break down the bullish case scenario considering Elliott wave theory. It has a chance. The chance is definitely there. But then, you're looking at the similarities of 2022. You're looking at the similarities, from this range of a few months ago, also quite similar. And then you're like, damn, this is scary close to being the same thing, basically, right? You're in a bear market, aggressive downtrend. You've been ranging for many weeks right now. This range doesn't look bullish. It doesn't look bullish. Can it be bullish? It can, but it would be funny in the next coming days that we pop out and start trading above 80k, right? And then, we'll just have to throw this out the window and say, you know what? This was BS. So the problem with the bullish scenario, there's a lot of red flags with the bullish case. This is the low at 60k. This is your first high. So if we are wanting to look at something bullish, there's the ABC, of course, as well, but this would have to be wave 1. This would be the wave 2. Then, you end up breaking out in the coming weeks. Your second wave 1, you don't have an impulse here, by the way. There's nothing you can count as an impulsive move as of yet. So you need to have an impulse here and then a wave 2. You need to figure out another wave 1, right? The third wave hasn't started yet in the bullish case scenario. This has to be your wave 1, because you can't have a wave 1 here with a 3-wave structure. So you need to, can this be a sideways correction? Yes, a running flat, basically, because there's no other way. There's no other way. If you got the low here and that's your highest high, can you form a 1 here? Well, it's a 3-wave move. So that has to be your wave 1. This has to be a running flat. 1, 2, 1 and 2. It is possible. Naturally you're bringing in bullish momentum in the next couple of weeks in the most bullish case, because you end up breaking out in a wave 3, 4, 5, 4, 5, right? You just continue uptrend momentum for the next few weeks. But there's a lot of red flags for this. There's a lot of red flags. Your wave 2 here is 5 times longer plus than your wave 1. Very, very long. Over 6 times longer. Your running flat here. Running flat is not too common. Is also like 7-8 times longer. It's not a pretty start of an impulse in multiple 1-2s. It's not a pretty start for an impulsive move up. So yeah, naturally the probabilities are not that great for this scenario. You could have an ABC, which is, this is your A wave, that's your B wave, and then your C wave still on the development, where you have your wave 1 running flat in wave 2, 3, 4 and 5, and then you roll over later on. Ends up still being a 3-way structure, but we ain't going to go down that rabbit hole at the moment. We'll analyze that in the coming days. That's if we do break up. But yeah, comparing the two main scenarios, it looks better for the bearish case, right? Showing you the fractal as well from 2022. And you're just going through the timing and the scenarios, right? It does fit in better as a corrective structure, impulse down. Do we struggle here? And to, at the value area high. And this is treating this as a swing trade perspective, right? I know a lot of you want to get into local scalping setups. I've explained a little bit of the 5-minute time frame, levels and scenarios that I would look for an intraday scalp, for an entry execution, good risk management. But the higher time frame looks interested. I'm more interested in higher time frame because I'm I'm more of a swing trader. And, hopefully this short trade that was provided here on stream last Wednesday, we did talk about this anchored VWAP, guys. This is the moment. We don't want to break above anchored VWAP. We're treating it as guideline. I'm not sure if we had another option here at 75k. I can't remember if we did have value area low of this trading zone. We did have probably some levels up there. Based on point of controls, yeah, most of them were at 78k, so anchored VWAP was very important to reject, and that was the heavy weight, right? This is a swing short. Let's see if this does play out in the coming weeks and ends up rolling over. And where we at right now, there is some doubts. There are some doubts. It would be pretty ashamed to get stopped out with the rest of the position here from this short, because this could be an epic short for the coming weeks. That's if we were to get below 60k. Would be very, very happy, of course, because I could buy some more Bitcoin with the profits of the short, right? So but let's see if we do get that scenario. It's still valid. I don't have a reason to close that short here. If I would have said, guys, this is extremely bullish, I need to close that short because I'm going to get stopped out. There's no reason still. 3 wave up, impulse down. This can still very much be corrective. The value area high, really struggling here at value area high. This is the zone of fakey outs, not struggling to break out. This is why, double, triple tops in this territory, either a local one or even the local highs for a fake out, is the name of the game here. This is fake out territory. And that's why if you claim the local highs, getting into a double top scenario is good for entries, right? And by all means, this is not like short, adding to my short, just because it looks so good that I'm just going to get into an epic short here and add to the position. There is a bullish case. There is a case that it breaks out above. I do not want any people to hold a short and be underwater. We don't trade like that. We don't educate people to trade that way. We are happy with tight invalidations, good stop losses, good entries, good risk management, risking 1 to 2% on average on your positions, and not get into a massive short or a massive long based on adding to positions here on shorts or longs, because that's the way to get hurt at the end of the day, right? Legends, thank you very much. But yeah, I'm actually, when the price is moving up and coming to try and break out from the value area high, and, there is that bullish case, there is that possibility, it brings your doubts, Even if I prefer the bearish case, I am doubting it a little bit. I'm like, they could pop out. Thanks, Andy. Take care. Distance Music, much love. Mariella, thanks for joining. Guys, Andy, check weekly, 6th of June 2022. I think this is where we are, and yeah, this is literally what we checked. May, June, weekly candle, everything. That's your opinion on that. I think the candle will flip red in the week. Literally just talking about that zone of June of 2022. Okay, we were just discussing that, I think, about 10-15 minutes ago. Very, very similar. Baby Genius, Olivia, thank you very much for joining everybody on today's stream. Make sure to join the trading community. That's where there's daily updates, possible setups that Devil or myself are looking for, levels of interest. That's where you get all of the meat and potatoes, guys, inside of the trading community on the Telegram. Send me the word access, join one of the affiliates down below and do a minimum deposit, and you can get free access, guys, inside of the trading community. Thank you very much for joining today. You've been absolutely great. We'll see you tomorrow or inside of the Telegram.